let's discuss the global macros. What's the way forward for commodities? And in the near term, now that gold has lost the status of a safe haven, where could global liquidity migrate in the near term and in the medium term? With Gabe Foster, he's head of portfolio strategy with Brewin Dolphin. Gabe, good morning. Guy, good morning. Thank you for joining us. How would you characterize the kind of selling that has come for precious metals and what has changed in last two trading sessions? Because if I look at the news flow which has come from China, it is not the first time the Chinese GDP has been downgraded.
Okay, well, it's very much a sort of flash crash sort of a selling session. I think just looking at it in terms of the last two trading sessions, the trigger very much seems to have been this idea of Cyprus being instructed to liquidate some of its precious metals reserves, some of its gold reserves. But really the driving force behind this, I think, goes back much further than that. What we've seen is what ostensibly ought to be months and months of really quite positive news flow for gold in terms of, you know, if you take it right back to the summer last year, the announcement of the OMT from the ECB and the announcement of open-ended QE from the Fed. And none of those stories have really managed to sort of set the gold market on fire. Instead, it's generally sort of traded down or trended down throughout those periods. So what that's left you with is a sense that really the sentiment behind the gold story is failing to match the news flow, and for a metal which is really dominated by sentiment rather than fundamentals, it's kind of left us with this sense that gold was looking to break downwards.
Guys, so who all are selling right now for the kind of impact that we've been seeing?
The selling, I think, I mean, it has the look of it, of a sort of algorithmic kind of selling. But I think if you look at the kind of research that you're seeing coming from technical analysts, there's been a real sense of this range of sort of $1,550 to $1,800 for gold, and so when you got down towards the bottom end of that range on a technical perspective, I think investors were very taken with the idea that you could go long gold through a spread bet, through a future, something like that, and have a tight stop loss somewhere just a little bit lower than between 1550 and 1500. And you saw a lot of research suggesting that as a trade it makes sense with these continuing positive news flow for gold, continuation of low real interest rates, of currency debasement, if you will, and so I think a lot of investors had that trade on, and then that just seemed to trigger this very technical reaction. And of course, what really matters now for gold is how long this period of instability lasts, because with those stop losses broken, that's caused a lot of supply to come onto the market and caused the very sharp adjustment that we've seen. And what really matters now is whether that is something which is seen as an opportunity for other speculative investors, or something which is seen as a reason to panic.
Guys, so what is your sense on gold? Now that gold has convincingly cracked below 1400, what could be the next port of call for gold?
Well, I think if you look from a technical perspective, and there isn't much else to go on, given the difficulties of fundamentally valuing gold, but from a technical perspective, you had that sort of 1410 to 1420 level, which was really established by some reasonably persistent resistance at the end of 2010, and then tested a bit more on the as a support level at the beginning of 2011. That's the level we've reached today, and it sort of looks like